Hey guys, so we got a lot to talk about. I didn't do a video last night just because I had some stuff going on, and also it was pre-CPI night, so we knew we'd have a pretty volatile day today, and it's best sometimes on these volatile days just to let it settle down, and let's just kind of see where we're at. So we're going to just go ahead and get right into it and just kind of see where we're going. So first thing to talk about is CPI, obviously. So my prediction I had was a 6% year over year, a 0.3 to 0.4 month over month, and then a 5.3 to 5.4 core, and then a 0.3 to 0.4 on the month over month core. We ended up coming in pretty much on point. We came in at 6% year over year, 0.4% on the CPI month over month. I did just undercut the core by 0.1%. So we came in at 5.5% year over year on core, and then 0.5% on month over month core. So overall, a fairly bullish print. So really the only thing that did not beat was core month over month. Everything else still shows a downtrend as of now. So there obviously is a chance that this will recoil. But as of right now, this is fairly bullish. So we're going to just kind of see where this takes us. So the next big thing to start thinking about is FOMC next Wednesday, a week from tomorrow. Yesterday, we actually, because of the bank run issues, started to price in the chance of a 0 basis point hike. As of right now, we actually are sitting at about a 22.5% chance of a 0 basis point hike, and then a 77.5% chance of a 25 basis point hike. 50 basis point hike is not even in the contention now. I posted last week that basically I thought we would get a bullish CPI print, which we did. And then I kind of thought we would just run into FOMC. Now, the bank run issue has kind of changed this a little bit because it obviously opens up the chance that we could have some bank failures and some bigger issues to talk about. But for the most part, I still remain pretty bullish. And I'm going to be looking for a breakout here. Now, this big drop we had intraday today before the end of day $5 recovery, that was pretty interesting. I was watching that pretty closely, and that actually had us set up for a very bearish reversal on the daily. However, the end of day push kind of made things a little bit more bullish, actually. So we're kind of in an interesting spot right here where we got some interesting supports that we're going to keep an eye on, and we'll just kind of go from there and see where we're going to end up next. So basically, we're going to update Monday and Tuesday today. So what happened is on SPY's daily, we established a new demand, which is support at 385.86. And in doing so, we actually took out previous demand, which was then a resistance at 388.5. So right now, our upside target on SPY should be 394.7. That's our next demand. So once you establish one demand, which is a support, you pretty much are going to look for a move up to the previous demand, which then that has turned into resistance. So realistically on SPY daily, fairly bullish in a supply and demand aspect here, and until we hit this level here, or until we establish a new supply, I favor the upside. Other things to keep in mind here from a price action standpoint, we have this really nice falling wedge right here. So we had this pretty impressive sell-off, a really big bounce the last 2 days here. But the one thing to keep in mind here is that we were not able to close over the daily 8 EMA. So generally speaking, when you lose the 8 EMA and then you try to break over it and reject with a wick like that, it is not necessarily bullish. It actually sometimes signals that this was the retest of a breakout, and this could be seen as a failure. We also have a doji candle on an upside reversal like this, which also, as you can see with dojis right here, and even right here, and kind of right here, an opposing way, that sometimes that actually is a rejection, and then that will lead to further downside. We do have PPI in the morning tomorrow, so that will be something that could move the markets. So we'll definitely be keeping an eye on that as we go forward, as we go into tomorrow. But the biggest bullish thing that I see is right now we took back 390.1. So I mentioned on Friday when we lost 390.1, I was really realistically targeting 378. We ended up coming down all the way to 380.65. Didn't quite get to 378, but we had a really big bounce, which pretty much bounced off the midpoint of the December lows that we consolidated in. And then now we're rallying back up here. So with retaking 390.1, as long as this level holds, that should open the upside target of about 400 to really 405.2. However, if we take out this demand, say tomorrow or even Thursday, and then we put in a new supply somewhere in this 400 area here that actually is bearish, as then we're putting in lower supplies. If you put in lower supplies, which are resistances, and then you continue to come down, that actually is a bearish nature. So you can kind of see here, we put supplies in down here, came down, bounced, put a new lower supply in, came down, and now we're looking to put again another lower supply in. So that continues the downside trend, essentially. So basically for me, the biggest thing to watch right here is 390.1 as a support. As long as bulls can hold that, I favor the upside into FOMC next week. And then from an upside standpoint, really 390.99.6 is going to be the major pivot point to watch up in this area of if we can break over that, which would put us back over the 8, the 20, the 50, the 100, and 200 EMA, that really does open up the potential for a retest of 405.2. Going into FOMC. So FOMC is going to be very interesting next week, mostly because of the dot plot that's going to be coming out. And everybody, or not, I wouldn't say everybody, a lot of people are suspecting that we're going to get a 0 basis point hike, mostly because of the, obviously the bank failures, which shows the economy issues and things like that. But I just don't think it's going to happen. I think we're going to get that 25 basis point hike. And I think that's going to be very interesting to see how the market reacts to that. Market isn't going to like that Jay Powell is continuing to do rate hikes despite the way the economy is facing. And this is going to put more pressure on the banks that are already struggling. So it's going to be very, very interesting come next week what happens. And I think the dot plot going into this week before, or last week, I guess, before the bank failures and the bank run started, I had already thought that we were going to get a dot plot, which was not very favorable to bulls. I thought the dot plot was going to show pretty much rate hikes through the end of the year, pretty much 25 basis point hikes through the end of the year. So now there's a lot of people that are calling for a potential for 75 basis point of decline or taking away a drop in basis point hikes before the end of the year. So that would be a pivot, not just a pause, but a pivot before the end of the year. So if the dot plot doesn't quite align with that come next Wednesday, I think we very well could get a really big drop. So it's definitely going to be interesting to watch, and I'll be keeping a pretty big eye on what's going to happen at FOMC, and mostly importantly, what the estimates are saying as we approach FOMC. So taking a look at futures here, same thing. We're going to do some updates here. Futures had a lot of things that happened. So we had come down here. We put in a new demand, which is support at, we'll just call it 38.90. From there, we took out previous 39.20 demand, which was resistance. And then we also took out 39.55 demand, which was resistance. So now on futures, actually, we have a really big gap right here. So we have a lot of room to go both ways. With this demand down here at 38.90, really we should, until we put in a new lower supply, be looking for a push back to this 40.53 area, which is the last supply and last big level. So realistically, the biggest level the bulls are going to have to fight through is this 39.90 to 40.20. This is where we're going to come into the 100, the 20, the 50, and 200 EMA. And you can see this is where we have had a lot of price action the last basically 2 weeks when we were we were having the first meltdown before the bank run issues. So it's very interesting here to say the least about where we're going to go. We did take back 39.20, which is pretty bullish. So that does give me the upside push that we could see the 40.55 area again. However, we're still in our blue downward channel here, and we are technically in a falling wedge here. And while we did close over the daily 8 EMA on futures, we actually have a really nice 39.55 double top. And you can see if you go back to the low on March 1st here, how important this 39.55 level is. And the fact that we have had 3 days essentially in a row that have attempted at one point to close over that level and have failed to says a lot about how strong of a resistance that is. So realistically, until bulls can close over 39.55, the upside is pretty limited. But really 38.90 is such strong support that we're just in a really tight range right here. We also have a potential for a double top to form on the daily right here, which would bring us back down to 39.20. Futures would probably be pretty flat overnight, though we've had a lot of movement on futures lately. So I'll be keeping an eye on that. And then the biggest thing that I'm going to be watching for is what that PPI comes in the morning. That PPI could definitely move the markets. If it comes in hot, which honestly it probably will, mostly because PCE and pretty much every other inflation data besides CPI for the last month has come in extremely hot. So we'll definitely see what happens with that. And if we get a hot PPI tomorrow, we might actually see a 50 basis point hike chance kind of come back onto the books. I doubt it, but at least a 25 basis point hike is pretty much going to be solidified. Looking at the VIX here, the VIX has had a crazy day. So leading into Thursday through Monday, the VIX, impressive amount of movements here. So we had a total movement on the VIX from Thursday's low to the high up here, about $12 for about 63%. Today, you can see we had a huge drop on the VIX. We ended up coming back down, touching the daily 8 EMA and bouncing. The most interesting thing to me is I've had this green channel. I mean, this green channel dates literally back till December, January of 2020 or December of 2021. What's interesting about it is this is the green zone. So basically this is kind of where we could be looking for a bounce up. A lot of this has kind of started to happen down in this red zone now, but with a failure to break back down into this level, this 23.7 pivot level here on 23.65 pivot level on the VIX, this actually could turn around and bounce back up. So you can see with these huge wicks on the VIX that we've had a lot of movement. The VIX has been very interesting to watch at times. So yesterday, for instance, obviously at one point we were at 30.8 and then we had a huge sell-off. And then there was other times where the VIX would rally right back up. So there's been a ton of movement going on the VIX. A lot of people getting in and out of long hedges, it seems, and putting some protection on. So definitely going to be watching the VIX closely and kind of see where this takes us next. Taking a look at the dollar here. The dollar has actually followed us on this basically 5-day sell-off since Wednesday last week. 4-day sell-off since Wednesday last week. Going to be interesting to see if the dollar will finally regain some strength here. But one interesting note is the last time the dollar was at this levels was the February 15th area. And what's interesting about that February 15th area is that is the day after the February CPI. And at the time, SPY actually was trading closer to about 410 to 415. So you can see, obviously, with us trading down at the 390 area here, we were much lower than we were when the dollar was at this point before. Other interesting thing that we're definitely keep an eye on is the 10-year yield here. So that has obviously also been a part of the 3-day sell-off. This is the new candle. So the candle opens at 6 o'clock. So that's why there's another one, which is actually tomorrow's daily candle. But so what's interesting about this is that the 10 years sold off with us pretty much like percent for percent with SPY. And then today, the 10-year actually bounced. So what's interesting about that is for these 3 days here, the way I'm seeing it and understanding it, and again, I'm still learning the 10-year, so somebody correct me in the comments if I'm wrong. But basically, we're coming down on the sell-off because people are basically piling into the treasuries, which makes the rates go down because they're scared. They're thinking we're going to have the financial collapse. They don't want their money in the market or in anything risky. And then comes today, CPI comes in good. Also, some of the bank issues have pretty much subsided and some of the fear has gone. So today we get a huge pop in the 10-year. So people are leaving the 10-year is how I'm seeing it. So it'll be interesting to see if this continues, if the 10-year kind of pushes back up or not. But overall, big drop in the 10-year. Looking at Bitcoin here, Bitcoin had a massive rejection off 26.5K. Bitcoin, which is very, very interesting also since Sunday, and this is Friday on Bitcoin right here, has actually rallied really impressively despite what's been going on with SPY. So shows that a lot of people are jumping back into crypto. A lot of people are also suspecting that there might be a bit of a artificial run being had on crypto so people can bail out of the asset. I don't really know how to speak on that, if I believe that or not, but Bitcoin definitely, at least for now, is looking good. All right, hope you guys had a good day trading today, and I'll see you guys tomorrow.